Extreme fear is back in the stock market, and today I want to talk to you like a real long-term income investor, not a trader, not a headline chaser, but someone who actually wants to build lasting wealth and steady cash flow over time. Right now the market feels uncomfortable. Red candles everywhere, scary news alerts, analysts screaming recession, crashes, bubbles, and panic selling is clearly taking over. But the big question is simple. Is this extreme fear a signal to panic, or is it a moment to celebrate and prepare? In this video I'm sharing exactly how I think, what I'm watching, and what my personal plan looks like during times like this, so if you're an income-focused investor, this is for you. Let's be honest, fear in the market never shows up quietly. It comes with noise, it comes with emotion, and it comes with pressure. Every time the market drops fast, people suddenly forget why they invested in the first place. Long-term plans disappear, patience vanishes, and logic gets replaced by fear. You start hearing things like "this time is different," "the market is broken," "dividends aren't safe," and "stocks are dead." I've seen this cycle over and over again, and one thing I've learned is that extreme fear is not random. It shows up when uncertainty is high, prices are falling, and confidence is low. But that's also when long-term income investors need to slow down, not speed up emotionally. As a long-term income investor, my primary goal is not to predict the next market bottom or top. My goal is to build a growing stream of income that pays me whether the market is green or red. That mindset alone changes how you see fear. When prices drop, income investors don't immediately see losses, they see yields rising, opportunities improving, and future income becoming cheaper to buy. That doesn't mean we buy blindly or ignore risks, but it does mean fear doesn't control our decisions. Right now we are clearly in an environment where sentiment is extremely negative. You can see it in volatility, in fund outflows, in social media, and in how fast people are willing to sell at any price just to feel relief. Fear makes people want certainty, and selling feels like certainty, even when it's the wrong move long term. This is why extreme fear often appears closer to opportunity than danger, but only for those who have a plan. My plan during times like this always starts with one thing: protecting my mindset. I remind myself that volatility is normal, drawdowns are part of investing, and income investing works best when you stay disciplined. I don't wake up thinking I need to react to every market move. I wake up asking one question: has the long-term income story changed for the businesses and assets I own or want to own? If the answer is no, then fear is just noise. The second part of my plan is cash management. I never go all in at once, especially during uncertain markets. I like having dry powder, because fear creates uneven opportunities. Some stocks drop too far too fast, others stay overvalued longer than expected. Having cash gives me flexibility and confidence. It allows me to average in, not guess bottoms. I don't need perfect timing, I need reasonable pricing and long-term income growth. During extreme fear, I focus heavily on quality. This is not the time to chase hype, unproven companies, or unsustainable yields. I look for businesses with strong balance sheets, consistent cash flow, and a history of paying and growing income through different cycles. Fear often pushes high-quality assets down along with everything else, and that's where long-term income investors can quietly build positions while others are panicking. Another key part of my plan is dividend safety. In fearful markets, dividends become emotional. People assume cuts are coming everywhere, even when cash flow says otherwise. I look closely at payout ratios, free cash flow coverage, debt levels, and management behavior. Companies that prioritize shareholders and have survived past downturns deserve more attention when fear takes over. I'm not chasing the highest yield, I'm chasing reliable income that can survive stress. I also remind myself that income investing is not about instant gratification. You don't win by being right this week or this month. You win by owning assets that pay you year after year. Extreme fear often causes people to sell right before dividends, lock in losses, and then miss the recovery. My plan focuses on staying invested, collecting income, and letting time do the heavy lifting. One mistake many investors make during fearful markets is overconsumption of news. The more fear-driven headlines you read, the harder it becomes to think clearly. I limit how much market noise I take in. I already know sentiment is bad, I don't need to hear it repeated 100 times a day. Instead, I focus on earnings reports, cash flow statements, and real business performance. Fear is emotional, fundamentals are factual. Another important part of my strategy is diversification. I don't rely on a single sector or theme to carry my income. Fear often hits different areas at different times. By spreading income across multiple sectors, I reduce the risk of one problem destroying my entire plan. Diversification doesn't eliminate fear, but it reduces its impact. Now let's talk about celebration, because that word feels strange when markets are red. Celebration doesn't mean being happy about losses. It means recognizing that future returns are often built during uncomfortable periods. Lower prices today can mean higher income tomorrow if you stay disciplined. When yields rise because prices fall, future income potential improves for new investments. That's something long-term investors quietly appreciate while short-term traders panic. I also celebrate fear because it reminds me that investing is psychological. If investing were easy, everyone would succeed. Fear is the price of admission for long-term returns. You don't get rewarded for comfort, you get rewarded for patience and discipline. Every major opportunity in history came with fear attached to it. That doesn't guarantee success, but it creates the conditions for it. My plan also includes realistic expectations. I don't expect markets to bounce immediately. Fear can last longer than expected. Prices can go lower. That's why I scale in slowly and avoid emotional decisions. If prices fall further, I see it as an opportunity to improve my long-term income position, not as proof that my plan is broken. I also keep a long-term calendar in mind. I think in years, not days. Where do I want my income stream to be in 5 years, 10 years, 20 years? Daily market moves don't matter much in that context. Fear loses power when you zoom out. One of the most important things I do during fearful markets is review my rules. I remind myself why I invest, how much risk I'm willing to take, and what would actually cause me to sell. Fear alone is not a reason to sell. A broken business model, permanently impaired cash flow, or a major change in fundamentals might be, but price volatility by itself is not. I also avoid comparing myself to others. During fear, some people brag about selling at the top, others claim they predicted everything. Most of that is noise. My journey is about building income for my future, not winning short-term debates. Staying focused on my own plan keeps me calm when others are emotional. Extreme fear also forces discipline. It exposes weak strategies and emotional decision-making. That's uncomfortable, but it's valuable. Every fearful market teaches lessons that make you a better investor if you're willing to learn instead of react. So is this panic or celebration? For me, it's preparation. I'm not blindly buying everything, and I'm not running for the exits. I'm watching, analyzing, adding selectively, and staying patient. I'm respecting risk, but I'm not letting fear steal my long-term income goals. If you're a long-term income investor, the worst thing you can do during extreme fear is abandon your strategy without a rational reason. The best thing you can do is revisit your plan, strengthen your conviction, and use volatility to your advantage over time. Markets will always move in cycles. Fear and greed will keep repeating. The investors who succeed long-term are the ones who stay disciplined when emotions are high. Extreme fear is uncomfortable, but it's not new, and it's not permanent. My plan is simple: stay calm, focus on income, buy quality at better prices, manage cash wisely, and think long-term. That approach has worked through past market storms, and it's the same approach I'm using now. If you're feeling nervous, that's normal. If you're feeling unsure, that's human. But remember, investing is not about eliminating fear, it's about acting wisely despite it. Extreme fear can break you, or it can build your future income, depending on how you respond. This is how I'm approaching the market right now as a long-term income investor. Not with panic, not with blind celebration, but with patience, discipline, and a clear plan.